Hello, viewers. How we've been doing? Yeah, today I'm going to be sharing with us a week ahead and my directional bias. Now, I want us to understand something very, very seriously. Something that is very important in trading. You know, you don't just dive into trading without knowing what trading is all about. And believe you me, if you really want to be profitable in trading the FX market, that is the foreign exchange market, you need to be very grounded in what we call market structure. I tell you, if you have been struggling, being profitable, that is what you need. Knowing what market structure is all about, that will give you an edge. Even if there is news, FOMC news, Fed, ECB news, BOJ news. But I tell you, if you know what market structure is all about, I tell you it will give you an edge because that is what you need to be profitable in the FX market. Now, before you start at all, there is what we call top down analysis. And what is top down analysis? That top down analysis is what will help you to know the direction where price action is going next. What you need to do is start from the higher time frame. The higher time frame. When we say higher time frame, you start from the monthly, no matter the kind of trader you are. It may be intraday trader, a swing trader, even if no matter the type of trader you are, you are advised to always do your top down analysis for you to know where price action is going next. Now, here is the monthly time frame. All you need to do is you plot this, the high and the low. Very simple. That is all you need to do here. Then the next thing you scale down to the weekly because if you look at the monthly right now, all right, you will discover that this this thing here, one moment, this very one here is a bearish candle, right? It closed bearish because when you open a monthly time frame, each candle represents 1 month. So if you come here, this the Monday, 3rd of June, right, 2024, this candle closed bearish, right? Now this very one, this is a July on July 1st, 2024. You see, is it is a little higher, it closed higher, is bullish. So you can see that it's bullish. Now all you just need to do is leave that one, just mark the high and the lows. Now you scale down to the weekly. Now the weekly is now you can see the weekly you will also mark the high and the low. Now if I ask you, you discover that this thing here, price action started from here, right? If you look at from here, if I ask you now from here to this point, for you to know where it's going, this is bearish. This is a bearish leg. From up to down is bearish. Now it's making a It's making a retracement, which we will call that is bullish. It's a bearish trend that is making a retracement. Now he has made a retracement up to this point, okay, which is the the weekly high here. He has made a retracement up to this point. Now you discover that from here he has continued the correction. Anyhow, why? Because he has broken the low here. Okay, if you look at it very well from here, it's been higher highs, higher low, higher highs, higher high. Then instead of it to come down to make a higher low, then break structure up, there was a change of structure here. So it now broke the structure down. That means violated this place, meaning that there's a change in trend. What now happened? It broke lower low, then lower high, right? Why is it lower high? Because it failed to take out this high. If you are taking out this high, that means the underlying trend will still continue. That is why we regard this as a strong high. Strong high, meaning that it's a strong high because he violated this, he broke the structural low, right? Now, this is a weak, it's a strong, this is a weak high. It's a weak high. One moment. This is a weak high. It's a weak high. We call it here. We'll just put a symbol here. This is how to denote, to know the direction of what? Trend. This is a weak high. You know why is it a weak high? It's a weak high because it failed to break this structure. Normally, as you retrace, there's a pull, there's a trend down, a bearish trend. It stopped here. It has violated this point. It retraced. There's a pullback. Then the next action supposed to break this. So it's supposed to take this structure high. It's supposed to take this structure, no? Instead of it breaking this place, it came and it stopped. Or you can even say, look at it, it came here and it stopped here. It did not break the structure low. So it went back. Now, this very one here, this high here, broke this structure, right? This one broke this structure, meaning that this is a strong high. This is a weak high. Now, the overall trend here now is trying to, at the end of the day, after all those rigmarole, is preparing to come and tap into this demand zone. That is the idea. Because as soon as it comes, because price action move in waves, in oscillation or in waves, up, down, down, before it finally comes to take out this low. It will definitely come to take out this low. But before it gets here, it will take time. But for you to know how price action move, now this place, it went up and now it has broken the structure. It broke this structure, it has taken this one off. It went up again. It did not, it failed to take this high. So it is a strong high. We call it a strong high. Now here it has come down. It failed to take this high. You're right. It failed to take it. That means this is a weak low. It's a weak low. That means as price comes up, it's supposed to take this high because it's a weak high. He failed to do his job. He failed to do his job. He's supposed to come to take this low, but he didn't. He failed to create another low. So he turns here and went back. That means this high has to go. All right. Now that he has taken it out, okay, don't forget This low now, because it's a weak low, it needs to go. So price action will come and take this low, come and take this low, then tap into this place, do a kind of, is going to, from here, for example, just walk around, then finally it will break structure down. So that is how it should be before you come down to take this low. That is how price action moves. That is how price action moves. So all you need to do, when after you have scaled down to the weekly time frame, you mark the high and the low. Then all the PIOs, those reference points, like here, the price action stopped here, price action stopped here, price action stopped here. So you mark this place as well. Then you mark the low. After that, you scale down. Because now, if I should ask you now, what is the condition of this trend now? From here, you see that is going down, is going down. From here, you will see that this is a bearish trend. You don't need to make mistake about it. This is a bearish trend. It's a bearish trend. Even though this one here is still trying to form as if it's going up, it is a corrective phase. Because why? Why is it a downtrend? Because if you look at it, this is a high, followed by another high, followed by another high. Now, you know why price action took this one away? Because it is a weak high. This place is a weak high because it failed to do its job. It's a weak high because it failed to do its job. Weak high. Because he failed to break this structure low. This one is a strong high because it broke this structure. This is a strong high because it broke this structure. You see, it broke this structure though. This one is high, this one is lower than this one is lower than this. Then this one, instead of it to come down and take this structure and come down lower, it got a support here. Then it got a rejection. Then it now turned back to take out this weak high because this high fails to break the structure down. Now, at this point, this time around, now that he has tapped into the strong high, it cannot, price action will not take out this high because it's a strong high. Then he needs to come, he has found a resistance here. He needs to come down and remove and take this weak low and take this weak low and take this weak low. He has to take this weak low, then come back and break structure down. That is to tell you that this trend is still coming. The whole idea is for this trend to come and tap into this weekly this weekly demand zone. That is the idea. So after you have done that, marked all, you know the direction of the trend, you can now scale down to 4 hours. Now 4 hours, you now need to fine tune your your analysis, right? Now you now mark the high again, and if I ask you again, you will know that okay, this thing is definitely it's a downtrend. Even if there's a corrective phase here, now he has tapped into the weekly high, then is coming down. So if you look at it from this place down to this point, if I should mark it for you, you discover that from here now to this point, how many pips? That's about 309.3 pips to be taken. Okay, let's assume, because now that he has tapped um, into this point, into this weekly high, it will come. I'm expecting a, a retest. All he has already done it because, or rather, he can still come to do a retest. If you scale down to this thing, you discover that okay, it's all right. From here, you see that price action is coming down. So where is it going to take out this weekly demand zone? It's coming here to take out this weekly demand zone. So that is how you do your analysis, guys. And after you have fine tune your analysis and on the 4 hours, now what you need to do is you now scale down to your preferred lower time frame for your execution. 15 minutes is okay, but I tell you, if you want to be profitable in FX, first exchange market, try to avoid to trade on lower time frame. You know why? Lower time lower time frame, there are so many noise, and most often the resistance and support does not actually hold because they are very easily broken. You understand? But the higher time frame, once you were able to point out a resistance or or a supply zone, price action will get there and it will definitely respect that point. Now, I'm not saying you shouldn't trade lower time frame. Why? Because there are vast opportunity there, you know, to trade because you need instant money. But to be honest, if you want to trade safely and maximize your profit at all times, it is always advisable for you to always trade on higher time frame. I personally trade my lower time frame is 1 hour because there are no noise. Once you are able to spot formation of your strategy, it will just go to the direction of of where you have chosen, even if it's if the if the if price action is going to bullish and you are able to spot it, it will go to that direction. Why? Because it's a higher time frame. It's higher time frame that dictates for the lower time frame. Because lower time frame, the resistance and support levels are very easily broken. So guys, I tell you, all you need to be profitable is what? The ability to read market structure, the ability for you to do the top down analysis proper. So once you have done your markings on the monthly time frame, you just mark the top and the down, the high and the low. You go to the weekly. It's the weekly that you will do your major markings, all the PIOs, all the reference points, you where price action has touched, like